welcome to FinTedu's webinar on e-invoicing insights. I am Anu, co-founder of FinTedu. In terms of agenda for today, we'll be covering e-invoicing adoption and developments by Diana. Diana is a partner at Leva Analytics and specializes in e-invoicing and cybersecurity services. And she has worked with Thomson Reuters for over 10 years. The second part we have key takeaways from invoicing implementation in Saudi Arabia. This topic will be covered by Manish Bansal and Saad Mohammed Iqbal from Deloitte. Manish is a director at Deloitte Middle East and he specializes in indirect taxation with over a decade of experience. Saad is a senior tax manager at Deloitte with over 10 years of experience, and he specializes in e-invoicing implementation and tax advisory. Before we start, I would like to briefly share about what FinTedu is and how we can help you. Yes, so FinTedu is a technology-driven education company that empowers tax, finance, accounting, and compliance professionals in the Middle East. At FinTedu, you can access tax laws, you can access double tax treaties, articles, industry news, e-invoicing content. In addition to this, you can also enroll for KSA certified courses on corporate tax, VAT, AML, transfer pricing, etc. We also have e-learning courses on finance, Excel, IFRS, customs, and excise. You can connect with us on LinkedIn, Twitter, YouTube. We'll be sharing the links in the chat box. So this is all about FinTedu. Coming back to e-invoicing for the first topic, I would like to invite Diana.
As an introduction, and thank you for the introduction, Anu. I'm invoicing advisor from Legal Analytics, and we are advising governments as well as businesses in adoption of electronic invoicing in the region. So in Legal Analytics, we became the first invoicing advisor in Open Paper in December 2023. So I'm going to touch base on where did electronic invoicing start, give a background of the electronic invoices, the changes, the achievements as well, and the reason why we really need to be proactive when it comes to adoption of electronic invoicing. So electronic invoicing started in Latin America. Basically, the pioneers in electronic invoicing is Mexico, Brazil, Chile, and Colombia 10 years ago implemented electronic invoicing. The main purpose of adoption of electronic invoicing was really to modernize the tax administrations. They wanted to be more proactive. They wanted to have more increased revenue and compliance as well. We've seen the trend in Latin America, where in Peru, Brazil, and Mexico, the introduction of electronic invoicing really is becoming a huge trend. It's not only one project, it's a process. It's a process where the electronic invoicing will evolve over the years. We've seen a lot of developments. In Mexico, for example, after 20 years of implementation of electronic invoicing, the tax administration there already provide a pre-filed tax returns, not only for indirect tax for VAT, but also for corporate tax, personal tax, and payroll. In the case in Colombia, the adoption of electronic invoicing was 10 years ago, and it very much advanced, where it's clear as model. Every single transaction, every single event that happened during the operational model is approved and verified by the tax administration. And the reason why is because the tax administration wants to take high quality of data to be able to use it in the future. As of now, in Colombia, the electronic invoicing is not only for tax purpose, but also is used for factoring. So we can negotiate the electronic invoicing in the market. There's currently in Latin America more than 10,000 million of electronic documents has been exchanged over all these years. We can see that the main trend in Latin America being the pioneers, the implementation of electronic invoicing for one country to another country is not the same. And the reason why is because the systems are different, because they can use a specific standard, which normally is XML, but they adopt to the local market. And this is the case for most of the countries. All countries in Latin America use XML and localized XML. And the only two countries that use XML but UBL, which is an OASIS standard, is Colombia and Chile. Apart from the rest of Latin American countries, it's the same as Italy, are using XML and it's localized. The characteristics of electronic invoicing is they should have one standard, which is XML, and to be able to generate interoperability. It will be very easy to read information, to exchange data. Another common aspect of electronic invoicing as a framework in those countries is the data. And I come back to my point previously that this validation happened in the same in Saudi Arabia is because the tax administration wants to take control what data and to take control what data they want to take and they want to future purpose, like adding for tax audits to add new services, online services. And we've seen a lot of improvement in the adoption of electronic invoicing, how the data is using. So first of all, normally the adoption of electronic invoicing is B2B and B2G. And this is the start when basically to tackle the indirect tax first, and then it will be scalable. Over the years, we've seen in cases all countries are covering every single transaction, even export. Not a single project, is not taking just a specific data that is required by the tax administration and to send it to them, but it's a process. It's really a process that they will evolve over the years. We will expect normally for any new changes in electronic invoicing system, countries are changing the legislation, adding new requirements to increase compliance every 3 to 4 years. So it's really highly recommended that, and this is what we discussed in our previous conversation with Manish and Saad as well, that the implementation of electronic invoicing has to be right from the beginning. The businesses really need to do every single tax analysis, tax and gap analysis to make sure the data sent to tax administration or electronic invoicing system is correct, is accurate, and the businesses will be able to use it, especially tax departments will be able to use the data for tax returns and for future tax audits. So let's go back. What is electronic invoicing? The definition of electronic invoicing will change depending on the countries. Some countries will have a specific definition. Some other countries, they will say it's only implementation of electronic invoicing is to facilitate the way of doing business in the country. And this is where we have the case of New Zealand, where this is the definition. And the reason why is because in New Zealand and Australia, the invoicing is not mandated by the tax administration. It means in Australia, electronic invoicing is in place, adoption of PayPal standards is in place. However, tax administration will not touch the data, will not use the data yet. It will use in the future, but as of now, they are not touching the data. This is different case in Saudi Arabia and Latin America, and of course, Italy. Tax administrations are using the data, and enforcement is mandate. So this is the main difference. Electronic invoicing, the consequences and the usage of invoice will not change as of now. But the only thing is electronic invoicing is one specific format, a standard format, will facilitate interoperability in the country and between businesses. Normally, it's XML. It's not PDF. So this is the misconception we have in the region. And when it's new in one country, is companies think, we have ERP system that generates PDF, invoice, and it's easy for us to send it by email. So in reality, it's not PDF, is not electronic invoice. It's not a copy of any invoice, a document, a photo. Basically, electronic invoice is the XML. So there are some countries that have a specification. Saudi Arabia, for example, it has is allowed to have PDF with embedded XML, and the reason is because businesses will still need to have a physical representation of the electronic invoice to be able to use and see what is in the invoice and can read it. But in reality, when tax administration comes to the tax audit, they will not ask for the PDF. They will ask for the electronic invoice file, which is archived in a specific requirements. And I think Manoj and Saad will can talk about this later in the case in Saudi Arabia. So this is something that's to be clear and to avoid confusion when it comes to electronic invoicing adoption in the UAE. As an example, we have this is a PDF. It contains all data. This is the schema. The schema may change from country to country. It depends on the requirements. But as I said, countries normally they adopt and customize their XML based on their local requirements. For example, in some countries, for B2C transactions, they need to use a specific document, which is some of the countries that will call equivalent document to tax invoice. It's not a tax invoice, but it's equivalent. Here in the UAE, will be simplified invoice, the same as Saudi Arabia. So, and the catalog, for example, product catalog is different from one country to another country. So these specific requirements will be part of the technical requirements in the schema. Therefore, the specification in the XML are different. And that's the reason electronic invoicing, it will be good for the future developments when it comes to export and international transactions and global trade. However, it will need more development, and as of now, it's not really in use. Because it will need agreement between different countries, sharing data, and it will have more time to adopt. So there are different invoicing models. And in reality, the electronic invoice model, there is no any model or any entity that say this is the model that should be adopted by countries. All models are different approach, and basically is how the data from electronic invoice will be exchanged in the ecosystem, in the electronic invoicing ecosystem. Some countries, they have clearest model. All data will be approved by the tax administration, but some other data will not be approved by the tax administration. Some countries, they send or share or give this responsibility to the e-invoicing providers to make some validation. And after, tax administration will add more validations to be able the data is clean enough and to be able to use it in the future for future developments, for tax audits, for refunds, for automation of tax returns. So if the quality of the data is not good enough, businesses and tax administrations will not be able to use it. We're expecting in the UAE will be decentralized model, CTC, where it will be using paperless standards, which is really the network of exchange of information, and it will allow interoperability as well. And the 5 corners is basically the tax administration at the end, receiving some data from the access point. So this is the rollout of expected rollout of electronic invoicing in the UAE. As of now, we have development services providers certification. As of now, UAE is needs to be really be as an authority in open paper, and this will happen anytime during this year or next year. As of now, in Q3, tax administrations, government is really providing certifications, at least the requirements to service providers to be certified. Analysis of the UAE data dictionary, which will be really low for the local needs. And the introduction is the electronic invoicing legislation is expected in Q2 2025, and the rollout and phase one will be July 2026. However, while everything happened, it seems very long rollout, the strategy rollout for electronic invoicing. And we really recommend companies to start doing the preparation of the electronic invoicing now. So what they can start doing, they can start doing multiple things, starting with something that is very basic and checking how the business is issuing the invoice as of now. The invoice really needs to show the real economic activity or transaction. So, and we discussed recently what happened in my personal experience when I bought a product online. It was on sale, 70% off. And when I received the tax invoice from the retail, so to my surprise, the invoice didn't show the discount. It only shows what I paid to them. And in fact, this is not what is a really well prepared invoice, because it's not showing the economic activity, the real activity transaction, what happened with the transaction. So in case any tax audit, the tax administration will easily can detect what happened with this price, what the price is different to in another, the trend as well. So we really recommend how they're issuing the electronic invoice now, plus how the VAT implementation was done in 2018. I don't see a lot of companies reviewing the VAT implementation because most of the companies assume it's good. However, it will have a lot of impact when it comes with electronic invoicing implementation. If the VAT implementation was not done correctly, it started with the basics is by selecting products, services, the taxability, the determination of the catalog. Just go review what are the products, what are the services we are providing. Are the taxability correct or not? Just start with the basics, and starting from that, I think is a good start. And I think I will hand over to Manij and Saad to give us the flavor of electronic invoicing implementation in Saudi Arabia.
Diana, just we move on to the next section. Just I want to reiterate one of the points that you have highlighted in the previous slides. Is like the important thing that you need to understand here is e-invoicing is not gonna change the VAT treatments that you are applying to your transactions, right? So as Diana mentioned, that you can simply start checking the catalogs of the product. So one important thing that needs to be understood here is if the existing VAT treatments adopted by the organization are not correct, or if you are uncomfortable whether you are applying the correct VAT treatments, then the starting point could be to do sort of a check or a health check on the existing VAT treatments to make sure that the treatments adopted are correct. If you will apply e-invoicing on incorrect VAT treatments, then e-invoicing is also going to be incorrect, because e-invoicing is not going to change your tax treatment. It's going to change how the information is related to the tax authority and to the taxpayers. So make sure you are very much comfortable that the treatments in the organization for the VAT are absolutely correct.
Yep. Thanks, Saad. And yeah, Diana, fantastic example. I mean, that's why I find VAT and e-invoicing very interesting, that everyone can relate to it. I mean, everyone in our daily lives, we come across tax invoices and VAT invoices. So we all can relate to your example pretty much around discounts and how the invoices should look like. Okay, quick introduction. Manish Pansal, director with Deloitte in Saudi Arabia. So KSA e-invoicing is almost now, it was introduced in December 2021. Yeah. So it was introduced in Saudi Arabia on 4th of December 2021, and it was a two-phased approach which Saudi Arabia followed. So the first phase, which started in December 2021, was the generation phase, what we call it in usual lingo. So it means that the taxpayers were required to uh, generate, store, and issue invoices, whereas phase two was the integration phase, or is the integration phase, where the taxpayers need to connect their system with the ZATCA. And as Diana mentioned about the clearance model, one of the models she discussed, right? So in Saudi Arabia, we follow the clearance model, wherein the taxpayers need to first link their systems with the ZATCA, get the invoices approved before they can, let's say, raise a final tax invoice. So that's how Saudi Arabia is going through. Now again in phase two as well, it's a phase two again is a phase-wise approach. So there ZATCA is going turnover by turnover wise. So wave one was where the taxpayers include exceeding 3 billion worth of turnover were required to comply with the integration requirements, whereas right now we are in wave 13, wherein the turnover has decreased to SAR 7 million um, worth of revenue in the previous year. So as you see, the e-invoicing is getting broad-based with each passing wave, and yes, we expect that at a point of time, and leaving aside the very small taxpayers, all the taxpayers would be kind of covered within the ambit of e-invoicing. Yeah, moving to the next one, I think this is around, and this is important again, Diana, that's just alluded to her in the first part of the presentation, as to what transactions are subject to e-invoicing. And this is very important in order to kind of configure your systems and then make sure that you raise proper tax invoices. So not all transactions, I mean, the key takeaway from this slide is not all transactions are subject to e-invoicing. Now, again, it might differ from country to country, but given that we are talking Saudi Arabia here, we'll discuss about Saudi Arabia. UAE, when it finally implements, might have a different regime altogether. But in Saudi, yes, any standard rated or zero rated supplies, so exports or domestic transactions, are subject to tax. Intra GCC supplies, nominal supplies as well, which is, let's say, the supplies at zero value, which are subject to VAT, need tax invoice, and any payments related to them also need a tax invoice. However, supplies such as RCM supplies, so any invoice that you receive from outside Saudi Arabia, or import of goods, or exempted supplies, do not need an electronic tax invoice. So that's the rule in Saudi Arabia. Okay, and so now we'll talk through some of the models that we have followed in Saudi Arabia, and as I alluded to in the past, it's the clearance model, and I'll let my colleague Saad Iqbal do rest of the talking on the models and forward onwards. Yeah.
Thank you very much, Manish. Diana has covered some of the models that generally are globally implemented, but here you will find the visual representation of the model implemented in case. As Manish mentioned, yes, one of the models is the clearance model, which is widely used because of the major transactions pertain to P2P. So there are two models adopted in KSA. One is a reporting model and another one is a clearance model, right? So reporting model is applied to business to consumer transactions. And if you see what happens in the reporting model is that supplier issues an invoice compliant with electronic invoicing requirements, and then supplier sends this invoice to the customer, and within 24 hours the supplier is required to send the invoice to the tax authority, which is called the reporting. So you generate the invoice, you send to the customer, and then you report the invoice to the tax authority within 24 hours. That's why it's called a reporting model. And if we go to the next slide, we will see the clearance model, which is applicable on the business to business transactions and business to government transactions, which is the major chunk of the transactions. What happens in this model is that supplier generates the electronic invoice, again, as per the requirements of electronic invoicing legislation. And then supplier first sends the invoice to the tax authority. Tax authority applies certain checks, and if these checks are passed, then then the tax authority clears the invoice and sends it back to the supplier. And supplier can only send the invoice to the customer after clearance has been done by the tax authority. That's why it's called a clearance model, and it's a real-time model. You generate the invoice, it immediately sends to the tax authority, and after clearance, you can send to your customer. It's clearance because it requires clearance first, and then you can send it to the tax authority. So these are the two models adopted in Saudi Arabia. So this is a very important section, right? The general perception, sometimes, like in many cases, I have seen what is the general perception that electronic invoicing is an IT project, right? IT is going to upgrade the system, and then our organization is capable to issue electronic invoices, and boom, we are good to go, right? But practically, this is not how it happens. With e-invoicing, there are so many other areas which also get impacted. You can see, many areas that get impacted. If we see the vendor and customer communication, for example, right? So as Manish mentioned, e-invoicing is implemented in waves. So even today, if we see, some taxpayers are subject to integration phase and some are not subject to the integration phase. How a customer would know that the supplier is subject to the integration phase or not? So for that purposes, the communication between vendors and customers is very important. They need to set an expectation what type of invoices the suppliers would be sending and what type of invoice the customer should expect from the suppliers, instead of just going vaguely. Transactions identification, the second circle that you see, a transactions identification is very important. It's going to be the initial work that needs to be done for the invoicing to identify which transactions are subject to invoicing. It's not that every transaction happening in an organization is subject to invoicing. It's not like that. So identification is going to be the key element to apply e-invoicing on only those transactions that are subject to the e-invoicing. Change management is always crucial. So many things are going to change with e-invoicing. The internal process in the organization is going to change. How you generate the invoice, what is the internal process of approving the invoice. For example, prior to invoicing, a person can send invoice to the customer once it's generated, but after invoicing, the person has to wait for the clearance from the tax authority and only send the cleared invoices. This requires a process change, right? The layout and everything of invoices needs to change. So change management is going to be critical, and it requires change not in just the tax function but other departments of the organization as well. If we see the master data, this is another very crucial aspect. What I understand, Arabic language is not something must in UAE, but it is in Saudi Arabia. But master data applies to both UAE and the KSA and everywhere, I would say, right? So prior to e-invoicing, the data points that taxpayer has to manage are they are not very well defined. But e-invoicing defines what data points, and what I mean, if I give you one example, for example, prior to invoicing, there was no specific information what information of the customer's address needs to be maintained. But invoicing pinpoints all the details that has to be present. For example, the street number, street name, district, province, and a lot of other information. Many organizations don't have that information in place in the master data, right? But now this information would be required, slightly different in UAE, but additional information would be required. For a larger organization, believe me, this is a very cumbersome process to gather that information, to verify that information, and update the master data. If you don't have that information in your master data, you cannot issue the electronic invoice, and that can hamper the operations. In cash flow, if you talk about the cash flow impact, it has twofold impact, I would say. The first is definitely invoicing projects has its own associated costs to implement the invoicing project. So make sure that the budgeting is done in the right manner, the budgets are approved for these projects. And second cash flow impact is that, for example, if an organization fails to comply with the invoicing in a timely manner, then the invoices issued by that organization can be rejected by the customers. They may deny to make the payment of the invoices, and that can have a huge cash flow impact on the organization. It can even hamper the operations of the organization. Before I go to the next points, Diana, Manish, if you want to add anything, Diana, if you want to touch base on the change management or any other aspect before I go to the next points.
Thank you, Sad. So basically, based on my experience and as well, doing some implementations by electronic invoicing system in Saudi Arabia. Electronic invoicing is a very disruptive change, actually. And the reason why is because it's a new way of doing business, new way of how tax administration will work in the future. The tax administration after invoicing implementation will not be just the old tax administration that you used to see, that only the tax auditors will work from 9 to 5 p.m. and after that they will not be able to issue any tax requirements. So this way of working will change dramatically after invoicing implementation, because the data, they will receive the data in real time, 24 hours. So basically, they will have 24/7 the job. They will just highlight, any discrepancy that is in the invoice. So first of all, it's a disruptive. Is, as I said from in the beginning, is not a project alone. It's a process that will evolve over time. At the beginning, companies and some transactions will be excluded, and this is the trend that happened in long time ago in implementations in other jurisdictions. Some transactions are excluded. However, when it comes to provide new services by the tax administration, at the end of the day, they want to pre-populate returns. They will need the complete view of the data, the transactions. So no transactions will be excluded. And it might happen, let's see, in 4 or 5 years, if Saudi Arabia will all transactions that are currently out of the scope of electronic invoicing will be included as a new change. So businesses should be ready not only for what is required now, but to see what are the trends and what the future developments will happen. So for any implementation of the tax technology, we always look at processes, people, and technology itself. So processes, what are the current processes? What is the as-is process, and what is the to-be process after electronic invoicing implementation? What are the changes? What are the processes that you have in place now, and how the data will flow as well? Quality of the data is important, as I mentioned. Master data is really important. Because now, there are a lot of studies on electronic invoicing implementation and CTC models as well, where the data is being, the main purpose of electronic invoicing is the data to be used and reused once. So you will not be able to have, otherwise companies will have a lot of reconciliations to be done with electronic invoicing, and we have more compliance burden as well. So communications is really important to understand that these are new changes. We have to issue electronic invoice. Paper invoice is not valid anymore, and the reason why is crucial, because at the end of the day, electronic invoice will be the support of all your VAT deductible, costs and deductions in your corporate tax, excise tax as well. They will have implication, and customs. So it will have impact in not only VAT, but the rest of the taxes as well. People, in a lot of cases, companies change people and rotate people. So training is crucial at all levels. From the as we used to say before in a Big Four when I used to work, from the secretary, from the receptionist to the CEO, needs to be aware. What are the requirements for electronic invoice? What are the implications if they issue a paper invoice? So this is training and awareness session and tax culture. To create tax culture within the organizations are really important to be able to be fully compliant. So I think this is my main.
Thank you, Diana. So I would like to, just touch base technology aspect a bit more, right? So because technology is definitely one of the important aspect of implementation of e-invoicing. So some questions that you need to ask yourself, right? Are your existing ERPs capable to issue electronic invoicing? If they are, then how are you going to upgrade that? Do you have the right skill set available in the organization, or do you need a third-party consultant to upgrade the systems? And based on our experience in KSA, we have seen many cases where the organizations are using legacy systems and they are not even capable of upgradation, right? In that case, they need to replace the systems, which requires a lot of time, cost, and support within and outside of the organization. And if the systems are not capable to upgradation, you can either replace the system, or you can use third-party solutions providers as well. In KSA, yes, third-party solutions are also available who can help you implement the e-invoicing if your systems are not capable. But then again, you have to be very careful to choose the right solution provider to make sure that they are compliant. So technology is very important aspect, and you make sure you have done the right assessment in a timely manner to make sure that the right technology exists in the organization.
I think just let me add something here, Sad.
Yeah.
I think we are getting warm this conversation. We are excited because I live this in real experience, in real life as well. And this is where in Saudi Arabia, some of the organizations, and this is one example I have, normally invoicing providers is a third party. Businesses will share the data with a third party, but at the end of the day, the responsible of the data is the business. The business who is sharing this data with a third party. Some of the businesses in Saudi, when it was at the time of implementation, they expected the service provider to do all this impact assessment, to tell them what they need to do internally. Some of the businesses, they brought the marketing to see the brand if in the invoice was correct. But for electronic invoice, for the XML, we don't really need the branding. It's more in the representation, but it was fine. The system in that case was legacy systems. The impact assessment was not done previously. Normally, and this is in my experience implemented solutions, for electronic invoicing, it will take approximately from 4 to 6 months to implement if the data is right. If some of the business invoicing provider will say, I will implement a solution in 2 weeks. How? If the data, if they have everything ready, but in my experience and being more conservative, from 4 to 6 months. However, in this case, integration with the legacy and still was able to to comply and send the data to SARCA. However, the manual process between the business, the data, the sending data from the business to the invoicing provider was done manually because it was impossible to connect it with the middleware, which is in the case that KSA, they have a lot of middlewares in place because the data from this legacy system were impossible to retrieve. And this is not very different in Saudi Arabia. In that case, the project that it could 6 months, it was delayed by 1 more year. So that's the reason impact assessment is really important to be done in advance to make sure. I know everyone in UAE is busy with corporate tax implementation. However, don't forget about the impact assessment and systems for before implementing electronic invoicing, because you will be very busy reading electronic invoicing legislation, technical requirements, which are sometimes a little bit complex, people standards as well. So let's start with the basics, what we discussed before, and I think this is a good point to start with.
Thank you, Diana. So coming back to the next point of the archiving, right? So because in e-invoicing, the real-time information is being sent to the tax authority. Sometimes the impression of the taxpayer is that as they have sent all the information to the tax authority, whenever they want, they can ask the tax authority to have that information. In some jurisdictions, it is possible you can download that information from the tax authority's portal. But if I talk about the KSA, and maybe the similar situation happen in UAE as well, you have sent the information to the tax authority, but you can ask the tax authority to provide that information back to you. So you need to make sure you have your own archivals in place, and archiving methodologies and details are also available in the invoicing legislation to comply with that as well, right? So, and the last point that I would like to cover in that slide is the contracts, right? So all the points that we have been discussing, make sure that these points are agreed with your stakeholders, your customers and the suppliers in the contractual term. For example, if you receive a non-compliant tax invoice, who is going to be the responsible, who has the responsibility to intimate that supplier is subject to the integration phase, right? So these things needs to form in the contractual terms so that, you know, there is no gap in between the taxpayers. Manish, you want to say something? I see you have unmuted your mic.
Yeah, I think contracting is very important, and especially, I mean, given that, let's say if you receive a non-compliant invoice and you overlook that, and ultimately what happens is, when an audit happens, the tax authority denies you the input VAT. You are required to reverse the input VAT. You will face the consequences in terms of, let's say, additional payment of tax plus penalties. So you should have appropriate indemnity clauses in the contracts as well, that the supplier is responsible to provide you a valid tax invoice. And if he does not do that, then he has to hold you harmless for any damages that you suffer due to non-compliant invoices. Yeah.
And one more thing as well that I would like to add here. And yes, everything is around the data from electronic invoicing, but there are some aspects that it needs to be reviewed as well, even it's not in the invoicing legislation. And that is, for example, the tax registration. So, and this is very, very, very important to consider as well when you are looking at the master data. A tax registration, because this is where the taxpayer this is going to be alive, right, in the tax administration. So if, for transactions B2B, it's really important to see, is my tax registration number correct? It does exist actually or not? In some of the jurisdictions, businesses can validate the tax registration number with the tax administration database. In some of the jurisdictions, they have to do it by their own. So this is a really important aspect that you will not find it in any electronic invoicing, in any electronic invoicing legislation, but you need to do it.
Thank you, Diana, Manish. So just to wrap up, now you have a better visibility that it's not an IT project. It involves so many other departments and functions in the organization as well. If we talk about the challenges on e-invoicing, definitely there are a lot of challenges, but some of the key challenges that you see here is an ever-changing tax environment, right? Legislation is not static, it keeps on changing, and sometimes a change in legislation may require change in system as well. You need to change the layout of the invoicing as well. It can be challenging for the organization, especially for those who doesn't have the right skill set, technology skill set and available in the organization. Integration issues, we have touched based on that. If you have a legacy systems, integration can be a very painful process, and you might end up not being able to integrate at all and might need to go to other options. Security and privacy, yeah, as many information is being digitalized with the e-invoicing, so security and privacy is definitely a big concern to protect the data so that it doesn't go into the wrong hands. So it's also very important to have right security checks available in the organization. Standardization, you know, it's we touch based on this one that different taxpayers may fall into the different phase of e-invoicing, or some taxpayers may be subject to invoicing and some are not. So having a standardization is challenging until everyone in a country becomes subject to the e-invoicing. User adoption, yeah, we have experienced, you know, the resistance to change, and I'm sure everyone at some level must have experienced that, right? So that's why training and convincing the users can be challenging, especially in the large organization where there are so many different departments exist, and some departments do not have any, you know, have a little information about the taxes. Technological constraints, you know, we have covered that. Cost of implementation is also we discussed in the previous slides, right? Implementation has its own costs, and if implementation is not done in the right manner or in the timely manner, then the cost in terms of penalties and fines can also be a huge cost. So it's better to spend on the right time rather than paying fine penalties to the tax authorities, which is of no use if you ask me. So the next slide, if we see, Manish, Diana, I would like to have your input on that as well in this slide, is, you know, we are with invoicing, taxpayers sending enormous amount of information to the tax authorities, and that information can be used not only for the VAT, but for so many other purposes as well. You're sending information, don't expect that this information is just, to do the compliance for your VAT returns. It can be used for so many other purposes, right? With that information, they can identify the tax returns that you will submit, whether they are in line with the real-time information that you have been sending throughout the period to the tax authorities. They can use that information to see whether your withholding tax is being compliant, to just analyze your overseas transactions, right? Because they will have information of the whole country, I would say they can easily identify if customers are claiming more than the suppliers are reporting in their output taxes, right? So this information can be used in so many ways. They can develop so many patterns and analysis. The audit approach can change. So make sure that you are sending absolutely right information to the tax authority so that you don't get in trouble. And don't just think from the VAT perspective, think from all other tax perspectives as well once you're sending the information to the tax authorities.
I think I will add something here, Sad. You rightly said not only for tax purpose, but also to detect tax fraud. So the importance of address here. Why the address is really important? Because in jurisdiction like Brazil, for example, where electronic invoicing and the data analytics from electronic invoicing is very advanced in Brazil, they will be able to detect in real time if it's as product, this service, where this service went to a real business, or really went a old house that is the owner is an old person, for example. So in that case, they have the picture as well in real time. They have the picture of the location of the recipient of these goods. What happened? It will say, no, it's not a business. It's not really an office. It's not a logistic company. It's really a house, an old house, for example. So this is a red flag for the tax administration as well. So every single data that is going to be shared has their own purpose, not only for tax, but also to detect tax fraud, to detect tax evasion, and to provide new services to the taxpayers. So, and in the same way, taxpayers will be able to do new things with this data. As we said, the data is the new oil in this region. So they can do more analysis, they can see the trends, they can reduce fraud as well within the organization, they can get payments faster. And basically, this data is very rich. And when the evolution, the electronic invoicing system evolve over the time, so this data will be more rich and tax administration will be able to use it in more effective manner. So nowadays, audits in Latin America are almost in real time. They do, and tax refunds as well. Refunds that before took around a year and a half. Now it reduces at 4 days. And in advanced jurisdictions like Mexico, Brazil, or Chile, where nowadays the pre-population of VAT return, 94% of businesses receive the VAT, the tax return with no objection, because the data and the quality of the data, the checks done by the tax administration are very high, that 90% of the businesses as of now, they don't do tax returns. They receive the tax return and they don't have any objection because it matches with what they have in the ERP system. It will take some time for sure, but this is the future.
Yeah, probably just one last point to add from my side is yeah, in the middle of, I mean, as you and Diana both have mentioned, right? It calls for a coordinated approach. It impacts both customs, VAT, corporate taxes, and within corporate taxes, I think one of the key area is transfer pricing as well, which we should not forget, because again, the taxpayers will be having so much of data. They can very well kind of do a sectoral analysis on what the prices are in a particular sector or in a particular industry. So if our prices are not within the arm's length, they can very well kind of get to know in advance without even conducting an audit on you. So that's also a very important area to consider in this context. So yeah, that's what that's my couple of cents here, I would say. E-invoicing, as we say, is it's a process in itself. It's not, let's say, just one just let's say an end to itself. It's a process in itself, and it has many folds impact, and it does take time. So time is of essence here. Though let's not think that we are in 2024 and invoicing in UAE might come in 26, so we have enough time. So we need to manage our time accordingly and start preparing from day zero, from today itself. And I guess the fact that you are attending this webinar starts your preparations in a way. And as Tina mentioned, data is the new oil. So with data, you can do many things. The tax authorities can do many things. So we need to ensure that the data, whatever is data, is passing through our systems and passing to the tax authority is absolutely correct in all respect.
Before we start, I would like to briefly share about what FintEdu is and how we can help you. Yes, so FintEdu is a technology-driven education company that empowers tax, finance, accounting, and compliance professionals in the Middle East. At FintEdu, you can access tax laws, you can access double tax treaties, articles, industry news, e-invoicing content. In addition to this, you can also enroll for KSA certified courses on corporate tax, VAT, AML, transfer pricing, etc. We also have e-learning courses on finance, Excel, IFRS, customs, and excise. You can connect with us on LinkedIn, Twitter, YouTube. We'll be sharing the links in the chat box. So this is all about FintEdu. Coming back to e-invoicing for the first topic, I would like to invite Diana.